Hey guys, welcome back. If you've been following me on this channel, you know that I've been hammering a single non-negotiable thesis. My belief is the global memory complex has permanently decoupled from the broader tech sector. And while we continue to see the mainstream financial media obsess over general tech volatility, the smart money right now has been quietly orchestrating a historic re-rating for the memory titans. We've officially entered the era of the trillion-dollar memory club. With Micron's massive moves and Samsung passing the mark earlier this month and SK Hynix joining Micron actually on the same exact day, the entire global memory supply now is controlled by a hyper-valued trillion-dollar cartel. Wall Street is finally realizing the fundamental reality. You can design the most sophisticated AI software on earth, but without physical high-performance silicon, you cannot process a single token. Today, we're going to skip all the superficial market noise, and we're going to zoom in on the only two stories that actually matter right now: a monster new valuation and a record-shattering $36 billion credit monster that reveals the hidden plumbing of Wall Street that hit the newswire right after the closing bell. And we're also going to take a look at an aggressive microscopic warfare over the hardware of physics of HBM. It's a war that's happening right now between SK Hynix and Micron, and it could decide the future of high bandwidth memory. Those are the stories we're going to talk about on today's video. If you haven't done it already, though, make sure you hit like, make sure you hit subscribe to the channel. Let's see if we can pass the 18,000 subscriber mark tonight with this video. Guys, before we jump into the story, though, we've got to go around the horn and we've got to take a look at the Fab 4 just to see how they performed today and what did they look like at closing bell. So let's start off with Micron. You guys can see that Micron actually just slightly pulled back today after the parabolic run that we've seen this week. The stock has been on a tear. It actually pulled back by about $5 today. It was up for a majority of the day, kind of bounced back and forth. It came just a pull back towards the end, a half a percentage point. Doesn't worry me in the slightest with this stock. If you look in the pre-market right now, you can see it's up by almost another $9, up almost 1%. So right now tracking at about $932.50. The stock hit an intraday high of almost $950 today. So I think it is just resettling. Probably had a little bit of profit taking that happened in the late afternoon today after we started to see just this massive run. I anticipate that we'll have a strong close for the market for Micron as we head off into the weekend. Everything is bullish with this stock right now. Nothing has changed from a fundamental perspective. In fact, we just continue to see more and more bullish signals in the market overall. Let's jump over and take a look at SanDisk, because SanDisk actually had a pretty strong day today, about almost a 3.25% growth, almost a $52 gain for the share. So you can see it's at $16.41. It was just about $3 short of $1,700 today. You can look to the right. It's a new 52-week high. It hit an intraday high over here of $1697.66. Stock is moving well in the pre-market right now, up another $11, almost 0.7%. But you can see it's at $16.53. Let's take a look at the hardware giant, the hard disk drive giants, the storage kings, as we like to call them. Western Digital was up slightly, pretty flat, actually, 40 cents high. Stock has been on a solid move. It actually got up to $5.53 today at one point. That's the new 52-week high. And we can see in the after hours about a $2 gain right now, hanging in at about $5.33. And then Seagate actually had a nice day. It was up over 1%. You can see it pushed towards 880 there, a little over, just closed under that, almost 881. It actually passed the $900 mark. We talked about that yesterday, but 905.39 was the intraday high. In the after hours, it's up by about another 0.5%, for about $4 overall. So sitting at about 885 right now. So pretty good across the board for the memory sector overall. I think we're going to have a strong week. It will be a historic week, quite frankly, for the memory titans, for the Fab 4. They've been completely re-rated. It's great to see. Let's see these stocks continue to move. But I want to jump into the stories that I want to talk about today in the video, because as I mentioned, there were two massive stories today that came out. One is kind of focused more on a macro play, and one is in that microscopic warfare that I mentioned around HBM. So first, let's talk about the macro layer. Before we get into the HBM war, let's talk about the macro layer, because there were some headlines that hit the tape today that all related to Anthropic, and I want to jump through that. And if you guys know, Anthropic obviously is the company that has the Claude large language model. So let's pull up the first piece, and you can see here that Anthropic's valuation now hits $1 trillion or nears $1 trillion, with the release of Mythos weeks away. You can see they actually secured down here $65 billion in the Series H funding, boosting its post-memory valuation, or post-money, valuation to $965 overall. And that's a significant number because they actually passed OpenAI's. OpenAI's valuation is at $852 billion. So this brings us to the ultimate question. When we see these types of monster valuations, what does this mean when we look at the Anthropic valuation, the OpenAI valuation, and ultimately the multi-trillion-dollar valuation for SpaceX IPO that's slated for this summer? What will it mean for the memory sector overall? Guys, in my opinion, it is a massive kind of raging green light for liquidity. When SpaceX comes public, they're going to be seeking almost up to a $2 trillion valuation to raise up to $75 billion. And Anthropic right now, you can see it primes the pump for a public debut. When it does prime the pump for a public debut, it'll create a influx of new institutional capital into the public tech ecosystem. But we have to remember the physics of all of these involved, because whether you're talking about Anthropic scaling trillion parameter foundation models or SpaceX processing large streams through Starlink, every single byte of that data requires physical silicon to store it. You cannot launch public AI software or satellite constellations without buying hundreds of thousands of enterprise NAND flash drives and HBM stacks from the global memory cartel. These historic mega IPOs are going to flood the market with liquidity, and a large portion of that cash is going straight down the stack into the hardware bottlenecks. The software and the aerospace giants, they may get the headlines right now, but the memory cartel is going to get paid with these IPOs this summer. But I think the real story, not just the valuation for Anthropic, but the big one that hit at the closing bell was all related to kind of a debt raise for Anthropic. So right at the closing bell, we saw Bloomberg and Reuters drop an absolute bomb of a news story that exposed where the ultimate hard liquidity is moving right now. So let me pull that up and show it to you. And you can clearly see on the screen here that it says Apollo shops $36 billion debt deal to buy Google chips for Anthropic. Let's dive into the details of these story. So Apollo Global Management and Blackstone are working to bring additional investors into a roughly $36 billion debt financing deal to help Anthropic build out its AI infrastructure. If we scroll down, there's an interesting part to this. The debt will be used to purchase Google's custom chips that are TPUs, which Anthropic will lease, according to people with knowledge for the matter. Broadcom, which helps Google develop the chips, is backstopping payments on the largest portions of the transactions. So this move will mark one of the largest ever private credit deals and also biggest chip financing transactions. It aims to tap Broadcom's credit quality to provide computing power access to Anthropic, which just eclipsed OpenAI in valuation, as I mentioned. So that story was a big story at the closing bell. And I think the hidden architecture of the deal that I just laid out with Broadcom and Google is the real signal. So Apollo and Blackstone, they are setting up a special purchase vehicle to borrow $36 billion to buy TPUs from Google and then lease those chips straight to the early stage AI powerhouse Anthropic. Now, why would a conservative private credit giants like Apollo and Blackstone dump $36 billion into an early stage startup? The only reason is because Broadcom is stepping in to directly backstop the largest portions of the senior debt. Broadcom, which co-designs these custom TPUs with Google, is providing residual value support guarantees. If Anthropic misses a payment, Broadcom's fortress balance sheet absorbs the hit. And here is the technical reality that the mainstream financial media completely misses. Google's custom TPUs are monstrously powerful, but they're physically dependent on large pools of high bandwidth memory and enterprise NAND flash to prevent catastrophic data bottlenecks. So whether Anthropic is deploying these clusters in New York, in Texas, Louisiana, or Indiana, every single byte of that 36 billion compute monster requires physical memory. So like I said in the earlier story, the software startups and the alternative asset managers are grabbing the front page headlines right now with this deal. But in reality, The memory cartels are the ones that will ultimately get paid over this financing deal and this partnership overall. Now, this brings me to the second part of the video that I wanted to dive into, which is that microscopic warfare that I mentioned in the beginning. The war that's happening right now between SK Hynix and Micron, and it's the war over the future of HBM. We're going to talk about that massive structural bottleneck we see in the market right now, because you can throw all the billions of dollars you want at private credit, but you cannot finance your way out of the laws of physics. And as these infrastructure bets scale up, hyperscalers are running into a physical ceiling right now, which is heat. Because when you pack thousands of HBM layers next to high-powered processors, you generate an insane amount of thermal density, specifically at the die-to-die physical layer, which is the ultra-fast hardware interface where memory connects directly to the accelerator. And when that area gets too hot, the system triggers thermal throttling and it instantly cripples AI performance. So this week, SK Hynix, they announced, or actually last month, they announced a new kind of architecture or a new tech. So they're trying to permanently retain their leadership in this space, their leadership in HBM. They launched a new structural solution called iHBM. Let's jump over and take a look at it. So let me pull up the article from Tom's Hardware, and we can dive in and take a look at this new architecture. But you can see here in the heading, SK Hynix unveils the iHBM thermal architecture that cools AI memory at the source. Integrated cooling elements inside HBM interface cut thermal resistance by 30%. And they're targeting their next generation of their HBM5 accelerators, and they're targeting dense AI data centers. So let's scroll down and take a little bit more at the story. You can see here, as I mentioned, iHBM architecture embeds non-conductive silicon cooling elements directly into die-to-die physical layer. It's a critical speed interface between HBM-based dies and the AI processor, which is prone to high temperature spikes during extreme traffic or extreme data traffic. SK Hynix believes that structurally preventing thermal throttling will enable next generation memory layers like HBM5 to scale for higher stack heights and sustain maximum data transfer speeds under heavy computational loads of the AI data center. So let's jump down and actually take a look at what one of these will look like. You can see on your screen here the hotspot overcoming, as I mentioned. If you look on the left, you see the SoC. That's the powerhouse AI processor, like an NVIDIA GPU. On the right, you have the HBM, the massive stack of high-speed memory dies. Underneath them sits the imposer, which acts like a micro-highway connecting the two. Now look at that kind of small rectangle underneath that's labeled D2D-PHY. That is the die-to-die physical layer. It's literally the physical bridge where the processor and the memory talk to each other at blistering speeds, swapping terabytes of data every single second. Because the data traffic here is so extreme, this exact bridge becomes like a roaring volcano of heat. In a standard HBM, the heat gets trapped under the stacks, forcing the chip to throttle its speed to keep from melting itself. But if you look at what SK Hynix is doing structurally, they are dropping a vertical block right next to it called the integrated cooling element, or ICE for short. This is a specialized non-conductive silicon block that acts as a thermal superhighway. Instead of letting the heat bake into the internal circuitry, the ICE block pulls the heat directly away from the die-to-die physical layer hotspot and shoots it straight up into the cold plate to be dissipated. SK Hynix, like they said in their header on this article, says it cuts thermal resistance by over 30%. It is an elegant physical fix to one of the absolute biggest bottlenecks in AI hardware right now. But if you think that SK Hynix just ran away with the market, you are dramatically underestimating Micron. Micron bulls in our community, you know, I've engaged with all of you on comments. I know for a fact that your belief is strong in Micron and their radically highly differentiated counter strategy that they have in the market right now. Because while SK Hynix is focused on cooling the chip down after it gets hot, Micron is attacking the physics on the opposite end. It's all around power efficiency with Micron. Micron's HBM4 12 high stacks, which are already in volume production for NVIDIA for their upcoming next generation Vera Rubin architecture, it boosts an industry-leading 20% improvement in power efficiency And that's a leading edge over the competitors such as SK Hynix. So in a hyperscale data center, less power draw means less heat generated at the cell level to begin with. But that's not all they're doing. I got to jump over and also just take a look at some of the patent data that just shows how Micron is sitting on an aggressive IP war chest, particularly one tech that I want to dive into and show you. It's a through silicon trench cooling. So let's jump over there and just kind of take a look at it overall. But I love this article because it kind of just walks through, like I said, Micron versus SK Hynix, the technology roadmap to 2026. The quote here is interesting. It says, SK Hynix holds 50% of HBM market and 315 patents through proven manufacturing execution. Micron counters with 621 HBM patents and radical architectural bets, including hybrid bonding, through silicon trench cooling, and fabric interconnect engines. They are becoming the industry's direction for HBM4. You can see it's just kind of patent divergence. 621 for Micron, 315 for SK Hynix. But they're calling out in this article right here that this inversion is the central tension of HBM memory, because you see the company with the larger patent portfolio is the manufacturing challenger, not the market leader, because SK Hynix has 50%. But I want to dive in and just talk about one particular technology. So let me scroll down to that, because it said they had three around these architectural bets with HBM4. So obviously one is hybrid bonding. I'm not going to get into that tonight. I just want to get through this because we're talking about thermal density. I want to get through and show you this through silicon trench cooling. So Micron's radical thermal differentiation. You can see their patent there. It describes vertical trenching extending from the top of an HBM stack to the depth within the stack, filled with coolant, whether that's water, refrigerant, fluid air, inert gas. They're filling that for heat dissipation. It's an optional integrated pump enables active coolant circulation, and a connector channels between the interface die and the memory stack provide fluid coupling between the multiple cooling trenches. This directly addresses the trapped heat problem in a 12 high or 16 high configuration that passive cooling cannot adequately manage. So Micron has a significant amount of patents, as you could see earlier, and a massive amount of just tech. So instead of relying on passive external package, Micron's patents describe etching micro trenches directly into the internal memory dies to fluidly couple with data center coolant lines. They are designing a fully integrated microfluidic liquid cooling loop inside the die stack itself. It's a classic head-to-head battle that we see right now between Micron and SK Hynix. SK Hynix is building a better external heat sink. Micron is re-engineering the internal cell structure so the fire never starts in the first place. So this is something we have to keep our eye on moving forward. Like I said, it is an architectural battlefield right now for HBM between these two players. Who do you think is going to win in the long run? Take a look at those patents. 621 versus 315. SK Hynix may execute better right now, but tech, in my opinion, will ultimately win in the long run if they can prove it to be true and prove it to be functional. Finally, as we wrap up the video today, look at the macroeconomic chessboard for what it truly was today. It's a completely closed loop ecosystem. When Apollo and Blackstone drop a $36 billion private credit bomb that's guaranteed by Broadcom, Wall Street is screaming that the demand for compute is insatiable. But that massive capital tsunami faces a physical brick wall if silicon cannot handle the workload. SK Hynix 30% thermal reduction and Micron's 20% power efficiency moats, they are not just neat engineering headlines. They are the critical enablers that make the $36 billion gamble financially viable. Wall Street is funding the engine, but the $1 trillion memory cartel is making sure it doesn't melt down. Let me know your thoughts in the comments below. Are you betting on the financial liquidity of Broadcom, or are you betting on the physical silicon engineering of the memory giants? If you got value out of today's video, if you learned something from today's content overall, make sure you hit the subscribe button, become part of the community. I hope you guys enjoyed the video. I look forward to seeing it tomorrow. Have a great night.